When people talk about business, they always say, oh, you've got to know your numbers. And I question them, well, what's the numbers they need to know? And there's never any detail, because in finance and accounting world, business world, there's a million numbers you can choose from. And you can pick as many metrics as you want because you just get any ratios. But when it comes to pricing, it's really 5 numbers you need to know. Sales, so that's just the total sale amount. Cost of goods sold, so the cost to actually deliver the work. So that's going to include field labor, materials, equipment hire, subcontractors, anything that's relevant to actually delivering that work on site. The third one is overheads. So that's your operating expenses. So the costs involved in actually running the operations. The easiest way to define that is all the costs that sit outside of actually delivering the work on site. What we're left over with once we minus cost of goods sold and overheads from sales is we have operating profit. And really that's going to be the position as we go through this where we want to start from is setting an operating profit target. Because at the end of the day, that's what we're in business for. Typically, most people talk about net profit. Net profit is what you get on the bottom of the profit and loss because that's after tax, after interest and whatnot. But what operating profit is, it's essentially your pre-tax profit. And why we like to look at pre-tax profit is because you as a business owner, you have no control over how much tax you pay. That's based off whatever the government and the ATO sets as the tax thresholds. What you do have control over is everything before operating profit, which is your cost of goods sold, your sale amount, and your overhead costs. You control that. So if we can control that, then we can control the operating profit. The fifth number is gross profit. Gross profit is the combination of overheads and operating profit. So when you subtract your cost of goods sold from your sale amount, what you're left with is gross profit. So that's the profit on the job. And at the end of the day, that's going to be a big focus of this session is figuring out not so much gross profit as a whole number, but what's our gross profit margin? What's the percentage of the sale amount do we want to be gross profit? If we can figure out that, that's going to make it a lot easier for you moving forward when pricing jobs because you know what that amount is that you need to achieve on every single job to 1, cover your overhead cost and 2, achieve the operating profit that you want at the end of the day.